If you've been wondering how easy it is to long and short crypto, Bitcoin, and any altcoin of your choice, look no further. We're going to be covering this exact same question here on today's video. I'm Blockchain Crusader, Crusading through these blockchains, and this is a Weex tutorial from beginner to hero on how to get everything done. So first off, you have to go to weex.com or their mobile app, create an account. Once your account is created, you have to deposit USDT if you're going to be trading futures. Once you have deposited on chain and you got your USDT put into the platform, come on over to your profile. Make sure you go over to transfer. You might not be able to see this too well behind my head, but you go over here and hit the transfer button. Coming here is going to confirm that the USDT you've deposited is actually in your futures account. If it is not, if it is in your spot account or any other account, you're going to choose, hey, I want to transfer my USDT from spot, not to funding, but to the futures account. You're going to select all, right? If you had any at that point, my money for this demonstration is already in my futures account. Then you would hit confirm and it would transfer your USDT from your funding or your spot account, wherever it got deposited, into your futures account. So once your USDT is in your futures account, you come on over here to futures, right? Go under futures, USDTM. And then here you go. It's going to open up the exchange and you're going to finally be where you can now select what asset you want to trade, correct? But before we select what asset we want to trade, before we start trading any assets on the futures here on Weex, which I highly recommend, they have tons of benefits. And we'll talk about those benefits in just a second. We'll circle back. Before opening any futures trade, you guys need to make sure that when you come up here, you're going to see either cross or isolated. Always use isolated. Using cross will allow your trade to suck in capital from the capital you just have sitting that is outside of your trade to keep your trade from getting liquidated. You do not want to use cross, especially if you're not setting up stop losses, which we'll cover here in just a second. So as a safety precaution, always use isolated on your trades. Now you have combined and separated. Combined means that every trade you open up, especially in this example here under Bitcoin, all my Bitcoin trades will be combined into one. If I have it separated, I can have 3 to 4 different Bitcoin trades all opened up completely separate with separate P&Ls, all being demonstrated and shown. And I can close all 3 or 5 of them, as many as I want, close them whenever I want individually. If you have it in combined, they're all going to be one. So just to be aware, I like to keep it in combined. I like to only trade Bitcoin or any asset in one direction. And if I want to add to that trade, I want to make sure it's just into that one trade. I don't want to have one big trade and one mini trade because I was adding on to it, right? So that's just me personally as a preference. Now, outside of that, up here on the right-hand corner, we have the leverage, right? Make sure you guys are well aware of the leverage you're using. You have leverage for shorts and you have leverage for longs, or I should say longs and shorts. They're different. You can have 5x for longs, and you can have 21x for shorts, right? Depending on what you want. So always be aware of what leverage you're using and make sure that you guys are knowing that your leverage can be different from your long to your shorts. They're not always going to be simultaneously the same, and you can change them however you want. Now, leverage here, obviously, goes all the way up to 400x. You can trade with 400x leverage. Would I personally recommend that or take any personal trades using 400x? No, but I know there's some people out there that love using high leverage, very low amount of capital to try to catch some quick moves. Not personally, not my trading strategy or trading style, but just letting you guys know leverage here can go pretty high. I mean, one of the highest out there that I've seen. Now, I don't like using that. I like using no more than 20 to 25x on Bitcoin. Bitcoin is the main asset that I like to trade. So that is what I'm confirming, right? 25x for longs, 21x for shorts. Now comes the trickier part. But nonetheless, it's easy. It's 1, 2, 3, and we got it done. We have limit and we have market orders. This is what's going to allow you to open your trade at an entry price. If you do a limit order, you are choosing the price you want that order to open up at, right? You can type it in personally, the price, right? Bitcoin right now is currently sitting at 108, 100. I can say, hey, at 107, open up a trade for me, right? And then I choose how much I want for that trade to go to, for how much capital I want to go into that trade. Right here, down here, tells you the cost and versus the max. The cost here is how much actual capital that you are putting into this trade. So always be aware of that. If you ever want to know how much of your capital, if you have $1,000, in this example, I only have $15 total in the account sitting here right now to show you this example, right? But my cost would be $3 out of my total 15. That is how much I would be putting into this trade. I can continue sliding this up. Now it's 7.19, right? $7.19. So that is something to be aware of on how much capital you're putting into your trade. That would increase your position size along with the leverage will tell you your total position size, which will then obviously your fees will be calculated off your total position size. Now, if that's what I wanted to do at 107, I want to go long. I want to put in $2.25 into that long, right, at 25x. I can just hit open long right now and it'll ask me to confirm. I'm like, yeah, this is what I want to do. Everything looks good. And I hit confirm. Guess what? Oh my gosh, where's my trade? I don't see it. I don't see it, guys. Let me show you. Back over here, it's not in positions because the position is not open. It is in open orders. It's an order waiting to be filled. This order has not been filled yet, so it is just sitting here. It is not an active trade just yet. Another thing you can do here is you can just cancel it whenever you want. You're like, hey, you know what? I don't think this order is going to fill. I'm going to cancel this order. Nothing happens. You get no fees charged. Nothing happens here because this order has not been filled yet. So you can cancel this at any point in time. Now, let's close this trade, right? Let's cancel it, not close, because that was not a active trade. Doing limit orders, as I'm showing you here, doing limit orders is way cheaper in fees than doing market orders. Now, be aware, if the price is moving quickly, you're going to have to try a couple of limit orders before one gets filled, right? It's going to be a little bit frustrating. Just be aware of that. Market orders, if you don't want to deal with that headache of trying to get your order filled because if the price is moving too fast and it's not filling, you open a market order and here you don't choose the price. Here you just put how much you want to put into the trade. Once again, $2.72 as in this example. I want to go long and guess what? It's going to instantaneously open the long the minute I hit open, right? It's going to ask me for a confirmation and then it's going to open at whatever the market price is moving at that point in time. So let's go ahead and do that. I hit open, hit confirmed, boom, my order has been placed. And if we go over to positions, now my trade is open. As you guys can see right here, my trade is open. This will tell you your unrealized P&L, your entry, the mark price, which is what the current price is, your realized P&L, which is the fee that was charged on this entry, on the entry of this trade, which then you also have your TP and stop loss right here. This is very important to understand that you need to set up take profits and stop losses so that you do not get liquidated, right? This is how you avoid liquidations. So my take profit, let's say if I was in this long, my entry was 108. I want to take profits once we hit 109, right? Then that is my my take profit. I would be about 51 cents, 19% returns on that win. Now my stop loss, like, hey man, I entered at 108.1. I don't want this thing. I don't want to lose more. If we drop down to 106, right? I want to be out of this trade, right? Now that is a 49% loss. I don't normally go for something like that. I would actually go for something a lot smaller, probably closer to 5 to 10% max, right? On how much I would want to lose. And then I would confirm here. That means, so what does this stop loss and take profit mean? It means that if the Bitcoin price, since I entered a long on Bitcoin, if Bitcoin goes to 109, my trade will automatically close and secure these profits. Now, the stop loss means the opposite. If Bitcoin's price drops and goes against my trade because it is a long, I'm in a long, so if it's dropping and it comes down to 107.7, close the trade automatically at a loss. Now, if you're in a short, it'd be the inverse. Your take profit would be the target on the way down, and your stop loss would be, hey, don't close out the trade if it goes over this price action, right? And then you confirm this. Once it's confirmed, that take profit is set, and you will see them over here in your open orders under triggers. You will see your stop loss and your take profit set there, and that will help you manage your trade as it moves up and down and Stop losses stop you from getting liquidated and losing all your capital in a trade, only a certain amount of percentage from the capital you put in, and your stop loss secures your profits. Now, you can secure profits manually as well here with this close button. You can say, hey, at X, Y, and Z, close 16%, right? Closing price. If we go up to 108, 200, I hit this close button. I want to close X amount of percentage. Boom. And I can close the trade manually and secure some profits while keeping the overall trade still open. You don't have to take complete profits or stop losses of your entire trade. There's partials as well, but that is a little bit more complicated for another time. That is how you open and close trades on Weex, one of the best exchanges out here that I've used in a very long time. So let's talk about some of the benefits of Weex. One of the biggest benefits of Weex that I personally like the most is no KYC required when registering, meaning no know your customer. You don't have to enter all your own personal data. All you need is an email, and obviously it is acceptable in the United States, so you don't need a VPN or anything like that, which is fantastic, right? Quick registration, no problems, nothing else. Also, Weex has 1,000 Bitcoin protection fund. What does this mean? This means that Weex itself has a fund with 1,000 Bitcoin that will help pay out any fees or anything that happens in case your account gets wrongly, for whatever reason, liquidated. Like just like we had that major liquidation event on October 10th, anything happens and you will be protected, and there is funds that the account itself, the platform itself has that can pay you back if anything were to go wrong. Another thing that Weex has is Weex has its own token, and by having its own token, if you are a holder of that token, you get lower fees and greater benefits overall by holding their token. Like I said, Weex is not just a futures trading platform. They also have spot, so you can buy assets on spot. You can copy trade if you're into copy trading. Follow some of the better successful traders out there, like myself, right? And you can copy trade there as well if you want to do that. But obviously, I urge you guys all to trade on your own and start learning those skills by yourselves, guys. These are all the exact basic actions that you need to use Weex to be able to start futures trading